Hello, this is the price action for yesterday, the Euro USD 3-minute chart. We had a bull spike, a bear channel, followed by an overshoot reversal. Let's go up to the 15-minute chart to see how this formed. So the day before, we had this very strong downtrend, and we've had a little bit of a break, and we've had a couple of legs down, and now we've had another very big break here, and we've had a very strong push above the EMA, and we've came down and we've created this double bottom. And then we've headed on up and we've had this minor reversal here, and we've gone back down to retest the low again of the channel. So a lot of times when you get that very strong push up above the EMA and then it comes back down and creates this double bottom pattern, a lot of times you get that another leg up, and that's exactly what happened last night. So let's go in and look at the trades for the day. So the start of the night, we've sort of broken out of this bigger channel as we saw, and we've had this range and we've spiked out. The start was in this tiny trend here, so we had this tiny micro downtrend forming, and we've come back down and we've overshot here, and by that stage you should be drawing in your range, so this orange here, and you should also have your blue micro channel on there to see the overshoot. We then pull back. You may be thinking to go long here. It's not a bad idea because we are expecting a retest of this channel after the first break. You usually get a retest of the high. This forms a lower high, and you should, if you're good at drawing channels, you can draw in your channel at this point and you'll see the rejection there, and you can take a scalp down to the lows. We then pull back again. We come back up to the top, so it's almost like a very messy second entry short at the top of the channel there. And we can go short again down to the lows, and then we pull back for a third time, and this time we overshoot and we create this range here. This is a more dangerous trade to go short on just because you've had the overshoot, you're in a trading range, but because of how bearish this is, you may be able to get a scalp out of there. It's almost like a textbook, two legs back to the EMA, and we get that scalp, and you may be thinking we're going to create the double bottom down here before heading up. And that's exactly what occurs. If you are looking for a really good swing trade now, and you're looking for that, this is not a bad place to be looking. We've got good rejection, we've got bull bars, pushing up. We've got a gap form, so entering anywhere, even if we make this circle a lot bigger, looking in this area here and thinking, yeah, we've created that double bottom. We're probably going to head up. Maybe it's a minor reversal, but it begins to head up. So you can jump on in there. It's very hard to get in here because we're right up against that channel line there. So it's difficult to enter. It doesn't really pull back to the other side of the channel. We get that overshoot here, but this is such a strong move up that, we just get the trading range, and it's sort of an upwards trading range, sort of heading up. And we do get that pullback back into the range, which you could take for looking for that second leg up. So yeah, a lot of times when you get a really strong leg up and you've done that double bottom, usually on the lower low, you'll get the two legs up. But if you break above here, you should be drawing your measured leg. So draw your leg to there and then go on the furthest pullback back and put your other leg on there. It's just because you've broken out, and that's a good place to be looking for a measured move target on bullish move like that. And those were the trades for the day. Daily intraday review is proudly brought to you by our visual trade journal. It's software for price action traders. It's a visual trade journal, meaning you can drag and drop right on your chart, rate your outcomes, rate your predictions, all on the chart. It's different than anything that's out there. Come and check us out at intradayreview.com.